Coming up on Business Incorporated. East African countries set to suffer more importation delays following new COVID-19 cases and Ukraine war. China's Sinosteel Corps signed $690 million contract to explore iron ore mined in southern Cameroon. Airports company South Africa briefs journalists as jet fuel shortage bites. Hello, welcome to the program. I'm Ladi Williams. First off, let's take a look at how the markets are doing at intraday. Starting with Africa, we'll see Nigeria's all-share index is bearish at intraday, down 0.36%. The market has been trading positive for weeks now, so hopefully it recovers before the close of trade. Meanwhile, South Africa's JSE is on the bullish run, up almost 1%. In North Africa, Egypt shed more than 1% at intraday, while East Africa's biggest market, Kenya, closed Monday's trade positive, up 0.17%. And in the Middle East now, major markets were trading in negative territory. Abu Dhabi was down 0.13%. Dubai shed almost 0.5%. Other regions in the Middle East, we see Saudi Arabia there was the biggest loser, with 2% shaved off its share index, while Qatar was down almost 0.5%. And now let's head on to Europe. In Germany's attempt to make the country less dependent on Russian energy deliveries, Germany's been trying to strike a deal with Qatar over deliveries of liquefied natural gas, that's LNG. But talks have apparently hit some major roadblocks. We have Chris Kober right there in Berlin. Great to have you, Chris. Well, what's behind these difficulties in getting this deal done?
There seem to be differences over key conditions. That's according to news agency Reuters. For example, Germany is reluctant to commit to Qatar's conditions to sign deals of at least 20 years. Now, that's something that Qatar, which is the world's largest LNG supplier, is insisting on. But this could clearly get in the way of Germany's ambition to cut its carbon emissions by 88% by the year 2040. So it's quite a predicament that the government is finding itself in here. Wanting to reduce the dependence on Russian energy has become a real priority. At the same time, particularly the Green Party, which is part of the three-party coalition in Berlin, does not want to fuel impressions that meeting Germany's climate protection goals is falling to the wayside. And there are more issues here, as Qatar is demanding on a so-called destination clause, which would prevent Berlin from rerouting the gas to other areas in Europe. That, again, is a condition which the European Union opposes. And there are also disagreements over whether the price for LNG should be linked to the oil price or not. Now, Germany has backed the construction of 2 LNG terminals and has rented 4 floating storage and regasification units as a stopgap measure. What it needs now is the actual LNG, and getting it apparently comes with more strings attached than the German government had hoped for.
Quite an interesting situation there. But what could a solution look like?
Well, one way to go could be a quid pro quo approach, meaning one side dropping a demand in favor of getting something else on a different front. So strengthening already existing ties, for example, could be an option. Qatar's sovereign wealth fund already has around $20 billion invested in Germany, with stakes in Volkswagen and Deutsche Bank. And now Germany is hoping for a possible two-way partnership with Qatar, where German companies such as Siemens Energy and others could help Doha with its attempts to put into action a sustainability plan it launched late last year. Now, one source close to the matter said that there needed to be a gentleman's agreement between Qataris and German companies, that LNG should only be the first step in a longer collaboration between the two countries.
And I see that the DAX dropped to its lowest level in over 2 months. That was yesterday. How are stocks faring today so far?
Looks like turnaround Tuesday so far. European stocks have been bouncing back, with the DAX and Frankfurt gaining around 1.5% in Tuesday's early trading. It's mostly bargain hunters that are lending support to this rebound. The sell-off yesterday, amid worries over slowing economic growth, has been too sharp. Some analysts say stocks across the globe have been hammered so far this month, with high-growth stocks bearing the brunt of the sell-off on worries that major central banks will hike interest rates aggressively to tame surging inflation. Adding to worries about inflation and high interest rates are concerns about persisting pressure on supply chains and geopolitical crises, analysts say. Softening global growth seems to be the persistent wall of worry for markets as investors look beyond the next 3 to 6 months. The view on growth momentum appears to be that revenge spending after the pandemic may be affected by higher borrowing costs. So far, though, stocks are staging a small comeback on Tuesday.
Quite interesting seeing that gradual pullback we're seeing today. Thank you so much, Chris Koba, right there with the updates from Berlin. Let's head on to the UK now. We have Juliana right there. Great to have you, Juliana. So the UK Parliament opening, you talked to Inni earlier about that. What's the update on that?
Good afternoon, Laddie. So yes, this morning's Queen's speech or reopening of Parliament, which is a monumental kind of symbolic opening of Parliament to readdress all of the issues that Boris Johnson and the government plan to address over the next 12 months. It was pretty unprecedented and marked a moment of possible change in this country because, of course, last night Buckingham Palace issued a pretty hasty statement at the 11th hour saying that Her Majesty the Queen, for the first time in more than half a century, wouldn't be delivering the speech. It was instead delivered by her son, Prince Charles, the heir, alongside his son, another heir, the Duke of Cambridge, Prince William. It was very short, but it did address 38 bills, which are pieces of legislation that the government hoped to put into law. Now, there are no surprises. At the top of the billing was, of course, the government's plans to tackle the cost of living crisis, which is a huge issue affecting millions of families up and down this country. I think the statement was quite stark in saying that, you know, things are not going to get better anytime soon. Kind of the Boris Johnson doubling down on the statement we received last week by the Bank of England Governor Andrew Bailey, suggesting that inflation, currently at a 30-year high of over 7%, could reach double-digit figures by the end of the year, up to about 11%. That was mentioned. Pretty soon after that was mentioned, we did have a lot of opposition MPs urging the Chancellor Rishi Sunak to try and put through an emergency budget to try and tackle some of the issues that are really affecting families up and down this country. Also, another bill that was mentioned is this Brexit bill. Of course, Britain is no longer part of the European Union, and as part of Boris Johnson's manifesto, he wants to remove large swathes of EU law from British law, so Britain can govern within its own aisles. And then, of course, the levelling up agenda, which was this huge agenda that Boris Johnson wanted to put into place before the world was locked down because of COVID-19. And that is really tackling some of the issues that this country has been dealing with over the past few decades, and that's lots of government money being pumped into the capital London, pumped into the southeast and the southwest, not going up to the north of the country. And that's all hoping to change. He wants to try and set out new infrastructure bills, new huge projects that will be going up to the north of the country, and also education. Education featured quite highly. We had some serious issues about children basically falling through the cracks, going missing during the lockdowns. Lots of children from less privileged homes who were unable to attend some of these Zoom education lessons that were taking place during the pandemic. There is lots to go through, but of course the cost of living crisis remains at the top of the government's billing. But then, of course, we've got charities and opposition parties saying that the government is not doing enough enough to address this, but there will be a standoff in the next few minutes between Prime Minister Boris Johnson and Sir Keir Starmer, the leader of the opposition, in the Palace of Westminster.
So much to unpack at the meeting. Well, we'll keep tracking as conversations carry on. But the windfall tax conversation is still on there. This time, the chairman of Tesco has called for a windfall tax on energy producers to help struggling families with the rising cost of living crisis. It seems companies are weighing in on the matter now.
Yeah, absolutely. No surprises that John Allen, who is, as you said, the chairman of Tesco, which is Britain's largest grocer, is weighing in on the topic. He was speaking earlier today on the BBC Radio 4's Today programme, talking about the issue, because I suppose grocery bosses feel it the most, because they are starting to see customers holding back at the checkout. It has been really difficult. He said that he thinks that Britain is going through some sort of poverty crisis that they haven't seen in a generation, again kind of doubling down on the sentiment we received last week by Andrew Bailey. He really tackled the Chancellor Rishi Sunak, suggesting that the national insurance tax, which was increased last month, shouldn't have gone ahead. He also spoke about the windfall tax, which is a one-off tax that should be placed on companies that have profited the most during the time when Britons have been struggling the most notably those companies are BP and Shell, the big oil titans that last week announced that they had had significant exceptional trading in the first 3 months of the year. Now the government have said that they don't want to put or impose a windfall tax on these oil companies because they fear that the foreign direct investment that they put into this country will be placed elsewhere. But Bernard Looney, the CEO of BP, said that he would be up for that. And the Tesco boss said, of course, they'd be up for that. And they'd be expecting that because you can't profit off people's hardship and not put back into the pot. So again, after the Queen's speech, we did hear from a lot of opposition party members saying that the Chancellor should be putting through an emergency budget. Perhaps that will happen. And perhaps the Chancellor, who we're hearing is mulling over some sort of windfall tax, will do a U-turn, as we know this government have done so suddenly in the past before, and make sure that those who have earned big pay back to those who are suffering the most.
Quite interesting, profiting from hardship. Well, it looks like the market's having a little breather right now. How's it looking over there?
You're right, they are having a little breather after yesterday's bloodbath, as you described it, Laddie. There are gains on the FTSE at intraday. The all-share is up 0.69%. The FTSE 100 up 2 by 0.70%, and the FTSE 250, that's up by 0.97%. In the currencies market, the British pound is currently trading up against the US dollar by 0.07%, also up against the euro by 0.23%, but down against the Japanese yen at intraday by 0.14%, Laddie.
Well, I did ask for a relief rally yesterday. Let's see how long this one lasts. Thank you so much, Juliana. Always great to talk to you.
Thank you, Laddie.
All right, now let's look at what's happening in Asia. See, Asia-Pacific markets fell after heavy losses overnight on Wall Street. So the tech-heavy Nasdaq Composite dropping more than 4%. Turning to trade after a holiday, the Hong Kong Hang Seng Index closed 1.84% lower to 19,633 points. Hong Kong-listed shares of Chinese tech firms dropped, with Tencent declining 2.29%. The Alibaba shed 4.81%, and NetEase fell 1.91%. The Hang Seng Tech Index slipped 3.22% to 3,906 points. In the broader markets, the Nikkei 225 in Japan fell 0.58% to close at 26,167 points, while the Topix Index slipped 0.85% to 1,862 points. South Korea's Kospi dropped 0.55% on the day to 2,596 points, while the S&P ASX 200 in Australia fell 0.90%, closing at 7,051 points. All right, the U.S. stock futures rose today as the S&P 500 tried to rebound after falling to its lowest level in more than a year. Dow Jones Industrial Average futures last up 200 points, while the S&P and Nasdaq 100 futures climbed about 0.7% and 1.1% respectively. Shares of AMC gained more than 4%, while Novavax dropped about 19% for the bell on the back of their most recent quarterly reports. Tuesday's moves came as Treasury yields eased from multi-year highs, while the benchmark 10-year Treasury note yield, which hits its highest level since late 2018 on Monday, traded roughly 6 basis points lower at 3,000, about 3% on the day. All right, we'll take a break now. When we come back, commodities market update is next. Do stay with us. This is Business Incorporated. Welcome back to watching Business Incorporated. Well, the airports company South Africa has held a media briefing to address the recent jet fuel shortage at the Tambo International Airport to reassure airlines that the supply of jet fuel at the airport is stable and sufficient to meet demand. ACSA says the jet fuel shortage challenge was a consequence of the unforeseen recent floods in KwaZulu-Natal province that affected transport infrastructure and disrupted supply chains. Our business correspondent, Brian Fageni, gives us this report.
After speculations, denials and reassurances, the airport company South Africa has announced several interventions to immediately stop the cancellation of flights and ensure adequate jet fuel availability to all airlines and at all times. This comes after 14 international flights were cancelled from 24 April to the 1st of May 2022 and about 3,150 passengers affected.
As AXA, we have for some time now issued assurances that airlines that the supply of jet fuel is available and that their contractual relationships with their suppliers would enable them to access this fuel. The disruptions have been created by the transportation of jet fuel interruptions as a result of the recent KwaZulu-Natal floods, exacerbated by the railway infrastructure damage, resulting in a force majeure being declared by multiple fuel suppliers.
Well, I guess most countries feeling that jet fuel shortage bite at this point. All right, now let's move on to the commodities market update. Well, the beauty and personal care industry was badly hit by the COVID-19 lockdowns, resulting work from home culture shift has rapidly transformed trends in the industry. For example, we've seen global cosmetic demand fall by 28% compared to pre-pandemic levels. Well, joining us now is Olufunto Ajenifuja. She's no stranger to makeup. Great to have you on the program.
Thank you for having me.
Yeah, so, looking at this new trend now, we see the market, for cosmetics was actually recovering with, business activity, coming back. But we're seeing like a change, in taste, at this point. What is the effect of this, changing trend, on the Nigeria's market? Okay, so
yes, the beauty and personal care industry was hit by the COVID-19 pandemic, but it's important to know that this was actually an industry that was already seeing declining sales prior to the pandemic. So the pandemic came and just took things to another level. And the important thing to note here is even though the industry is recovering now, there have been some fundamental changes when you look at consumer preferences and behaviors. So now people are opting for simpler routines. It's now quality over quantity. Now that we have the cost of living crisis, people aren't being as frivolous. They're spending wisely. So that's really important for those in the cosmetic and beauty industry in Nigeria to note that consumers want slightly different things. Now we're seeing, historically, economists said that lipstick sales should go up during times of economic difficulty. The lipstick index.
Right.
This is because this it's like a lipstick is like a little treat for the women in that time. But that isn't holding true now. Due to mask wearing and stuff from the pandemic. So the industry actually saw declining sales in lip makeup in general, and demand shifted to eye makeup, demand shifted to skin care and hair care. So instead of covering my flaws. I'm going to treat them because people are still people will always want to look good, makeup or not. So even though the price of everything is going up, the demand for beauty products and personal care products will always be there.
Right, and I'm guessing, the price of deodorants too have gone up,
Yes.
We're seeing everything rise, with cost of most inputs. But at the end of the day, there's some substitutes. I don't know if they still hold true now. Like some people used to use lemon.
Yes.
For their underarms.
Yes, yes.
Do you think that kind of substitution will happen?
Well, it depends because, there's also been a lot of research that those things have health implications for you. So I think they are alternatives.
Right.
But people still need, the proper deodorants, but they're just looking for cheaper alternatives. So they would rather buy, like I said, it's quality over quantity.
Right.
So they're just looking for something cheaper, but they can still get that
quality. But talking about cheaper, that has also brought up substandard products to the market. Those are actually, coming up and making sales. How's that impacting the market?
Okay, so, globally, people are feeling the effects of inflation. But in Nigeria, it's even more so, incomes, budgets are being squeezed. People don't have the money, and in Nigeria, a lot of people rely on imported cosmetics, imported body lotions, imported hair care, and the prices, like these retailers are facing higher transportation costs and logistics costs, so that's going to filter into the price. And people just don't have the money. So they'd rather just buy a fake product that costs them less. However, as I kind of mentioned before, there are health implications for using this because they use cheaper ingredients, but it's understandable that we're seeing an influx of counterfeit and adulterated products in the market because people just don't have the money. Like a high-end red lipstick that is very popular, I'm sure people know what I'm talking about. That costs 15,000 naira, and that is pretty. That's like almost half the minimum wage. Like, people can't really afford that, so they're going to buy the fake.
You wear that on your lip every day, about 15,000 a pop. All right.
Exactly.
All right, Lufto Ajenfuja, analyst, financial derivatives company. It was great having you.
Thank you.
Talking makeup.
Okay.
Thank you. All right, now, so moving on, East African countries are set to suffer more importation delays following new COVID-19 cases in China, the Russian invasion of Ukraine, increasing congestion in supply chains. Radio authorities in Beijing have imposed lockdowns in regions reporting infections, restricting workers to port yards. At the same time, the region, which imports more than half of its wheat from Ukraine, must now accept delays as the war disrupts routine transportation. And China's Sinotel Corp has signed a $690 million contract to exploit iron ore mines in southern Cameroon amid a push to cut Chinese reliance on Australian and Brazilian ore. Sinotel will produce 10 million tons of ore annually, containing 33% iron from the Lobe mine, and who leads the Cameroonian subsidiary was speaking to reporters. It will then enrich the output to produce 4 million tons of high-grade ore with more than 60% iron content. And that's it on Business Incorporated. Thank you so much for watching. We'll check how your money performs tomorrow. Thank you for watching. I'm Ladi Williams. Bye for now.